So there was an excellent question posed to me just the other day, and they said, well, CJ, I know that the $2,000, well, that pays down the line of credit, because I make an income of $5,000 and, I use my line of credit for Velocity Banking, but my expenses are $3,000, right? And that leaves $2,000 within the line of credit. And you know what? That's great and all, but what if I have to dip into that $2,000, what happens next? Well, we're going to go ahead and address that. What if you have to dip in to your cash flow? Okay, is it the end of the world? Is the Velocity Banking method something that you can still use? Or do we do something else? All right, so let's go ahead and dip into that right now. Don't forget to like, share, and subscribe this video right now. Do it right now so that your friends and family don't have to starve in the coming months. So listen, we have a line of credit, okay? Well, let's say $10,000, all right? $10,000, that's gonna be our limit. L stands for limit. The B, well, that's gonna be standing for the balance. And our balance at the present time is, say, $8,000, all right? And let's say your minimum monthly payment, that's going to be symbolized by the M. What would that be? About what? $8,000, would it be 120? Let's just say it's 120. $120 each month. Okay, this is going to be at 21%. Okay? Now, the question was posed, hey, I'm making the $5,000, I'm spending the $3,000, and $2,000 is going to be in my bank account, or in my credit card, but what if I have to dip into that $2,000, what happens next? It's okay. We're going to go ahead and show you a graph of what happens next when you have to dip in to that $2,000. All right. Let's say you are paying off a car loan of about $20,000. Okay. So here's the loan over on this side, and it's going to be $20,000. Okay. You got a monthly payment of $400 each month, right? And this is your Velocity Eliminator. You're trying to eliminate that loan with the Velocity Banking method. And let's just say you were at 6% here as well, okay? So you're at 6%. So let's go ahead and show you by a graph, okay, what you can expect on paying off that loan, okay? Now, let's go ahead and draw the graph, draw the vertical, and draw the horizontal line. Now, what's this? These are going to be the months down here, okay? So let's say this is the 6-month mark, this is the 12-month mark, this is the 18-month mark, and so on and so forth, all right? Let's go ahead and, you know what? Let's do one better than that, actually. Let's do one better than that. That way I can show you fully what we're talking about, all right? All right. Let's do this as a 1, a 2, a 3, a 4, 5, and 6 here, all right? And these are the months. So this is going to be the lines of credit. So you're at 10K right now. Let's just make that the top. Let's just make this as well. That's 5K. Can you tell that's 5K? Let's go ahead and do that. There, 5K, and of course this is 0K. Now, 10K is right here. Ye just said, all right, that I'm paying $5,000. Or excuse me, my income is $5,000. So what is this balance going to do? If you're at 10K, which right now he's at 8K, so let's put it right here, 8K, $5,000. What's that balance going to do? It's going to drop by $5,000. So you're going to be at $3,000. All right? You're going to be at $3,000. Now, you have to spend $3,000. All right? So what's it going to do? It's going to go back up to $6,000. And this is going to go on for a period of months, okay? So let's go ahead and just do the math. Remember, $5,000 again, he gets paid again next month. He's going all the way down to, that's right, 1,000. But then he has expenses, doesn't he? He has expenses. So now it's going back up, what, 3,000, right? So it's going back up to 4,000 and on and on. So let's just continue the scenario here. So he's back up to 4,000, but he spends, right? Oh, wait, he just spent, didn't he? So now he's getting paid 5,000. Look, paid that car off. Paid that card off, didn't he? C-A-R-D, paid it off, right? In about 4 months, okay? So what we have, right now, is a scenario in which he can't pay the 2,000 like he did here. What's next? What if he can't do that? What if he can only have 1,000 inside of the bank account? Well, let's go ahead and take the calculation for our velocity term. How fast are we going to pay our line of credit off as we are just eliminating that loan? How fast? How fast? So let's go ahead and do it like this. You take the balance, okay? Balance. Let's go ahead and just spell it out. And you divide it by what? What do you divide it by? You take the balance and you divide it by the cash flow. That's right, the cash flow. So let's say, and let's just write down cash flow here so you can copy it down for our viewers at home, on your phone, at work, whatever you're doing, right? Balance, you need to go ahead and bring the whole staff out here because they need to learn about this. Equals velocity term, okay? Balance divided by cash flow. That's going to tell you, okay, how long it's going to take you in a period of months to pay off this balance. So our balance right here was 8,000 and we divided it by our cash flow, which was at the time 2,000, right? That equals, look, we paid it off in 4 months. But what if you have to dig in? Oh yeah. What if you have to dig in to your balance? That's no problem. That's no problem. What if you have to dig into your cash flow? That's okay. All right? Listen, because even if you dug in $1,000, what is it now? You want to change that to a 1? Is that what you want to do? Okay, let's just clean it up here for you a little bit and just start all over again, all right? That way we get it, okay? Repetition, it's the mother of learning sometimes. So we have 8,000. We can no longer put in the 2,000 for our cash flow. We can no longer leave that there. What we must do then is replace it with, let's say, 1,000. And that's going to equal our velocity term, which is, now you pay it off in 8 months. And is that okay? Is that all right to pay it off in 8 months instead of 4 months? Sure it is. Sure it is. You know, if you get yourself in a bind like this, perhaps after 6 months, what should you do? Ask for a larger line of credit. Absolutely. Why would you ask for a larger line of credit, CJ? So that you could put that large line of credit towards this, paying this off. Oh man, watch this. Oh, watch this. You said you dug in, right, to the $1,000. Hey, right? Sometimes that happens, doesn't it? But you see, when you dig in and you say, listen, I want a bigger line of credit because I'm going to chunk this principal and I'm going to get rid of this loan so that the $400 can come back to me. And when it comes back to me, I now have more velocity. I have more cash flow so that I can pay off my loans and my debts even faster. You understand? And that's how it goes. That's why we wanted to ask for a larger line of credit. So let's go ahead and step it up to maybe 15,000. Shout out to Capital One, 20,000. You know what I'm saying? Absolutely. Shout out to PenFed. Give my clients $20,000 in lines of credit, just like that. $36,000 total. All right. Can't we just swallow up that loan and just reintroduce it into a simple interest line instead? Is that okay? I think that's okay. Folks, you need to get at me. CreditWiz@investorpro.org. We have everything you need in the links below, whether it's professional email, whether you need a virtual business office, or whatever it is, we have it right down here, okay? If you're needing to build business credit, you can, but we have what you need. CreditWiz@investorpro.org. Let us know. You take care. God bless and have a great night.